I believe the world's coming to an end. We may go through financial crashes and panics, and you come out the other side and the world is different. Yeah, that could happen. I don't say sell everything. I say and buy gold. I say buy some gold, have a slice, but there's plenty of room for diversification.
Jim Rickards, a highly respected figure in financial forecasting, is renowned for his accurate predictions regarding global volatility. However, his latest warning is unprecedented. He believes a forthcoming crash has the potential to shape the destiny of an entire generation. Today's video will examine Jim Rickards' analysis to understand the factors driving his forecast, providing you with the essential knowledge to navigate these uncertain times. Throughout his impressive career, Rickards has held influential positions in finance and government, showcasing his expertise as a lawyer, economist, investment banker, and risk manager. He has advised prestigious government agencies such as the U.S. Department of Defense and the International Monetary Fund, IMF, proving his ability to navigate the complex intersection of financial stability and national security.
This is going to be part of what throws the economy into severe recession. They're raising rates and inflation's coming down. But what they don't know is, are interest rates coming down because they're raising rates, or have they already hit the terminal rate and it's coming down on its own and they just don't know it? And that's a big deal, because if they're at the terminal rate and they just don't know it and they keep tightening, which they are going to over-tighten.
But what truly distinguishes Rickards from his peers is his insatiable thirst for knowledge and his multidisciplinary approach to problem solving. Armed with a degree in international economics from the prestigious School of Advanced International Studies at Johns Hopkins University, a law degree from the renowned University of Pennsylvania Law School, and an MBA from the esteemed Wharton School of the University of Pennsylvania, Rickards possesses a unique ability to dissect economic issues from multiple angles. Rickards firmly believes in the critical importance of understanding economic systems' interconnectedness and vulnerabilities. This belief is exemplified in his groundbreaking book, The New Great Depression: Winners and Losers in a Post-Pandemic World. Released in 2021 amidst the chaos of the COVID-19 pandemic, this thought-provoking masterpiece offers unparalleled insights into the potential aftermath of global crises. In the New Great Depression book, Rickards fearlessly dives into the economic implications of the pandemic, shedding light on how it will reshape the globe. As readers delve into its pages, they are confronted with fresh perspectives on the potential winners and losers in the post-pandemic world. It is a call to take measures, urging individuals and institutions to think critically about the future and take advantage of the unique opportunities. The world of finance is teetering on the edge of a precipice, with an impending crash that could redefine the entire economic landscape. Financial sage Jim Rickards, who sees unprecedented vulnerabilities in the current market bubble, holds a magnifying glass to this potential disaster.
The stock market perception here and the real economy down here. Now the question for investors is, when does that converge? Because it will. I always say reality always wins. Reality always wins, but not right away. The perception, the bubble, the wishful thinking can persist for a period of time. So I'm not saying run out and short the stock market. But you have to bide your time. You have to be patient. You have to understand what's going on, as I just described. Keep some cash, be ready for a severe correction.
Does he have any proof? Well, looking at the market cap of GDP ratio, which is the ratio that measures the size of the stock market relative to the entire economy, it has proven to be a reliable precursor of market crashes. Echoing the dot-com bubble when it reached its zenith, Rickards warns that the current ratio is a staggering 113% higher. This historic influx of easy money into the stock market sets the stage for a potentially explosive crash that could reshape our financial foundation. If the market cap of GDP ratio is the fuse, then margin debt levels are the gasoline that ignites the inferno. In the past, before the crashes of 2000 and 2008, margin debt reached alarming heights. Today, the global stands at the precipice of history, with margin debt levels at an all-time high, flirting with a $1 trillion mark. This unrestrained borrowing can potentially ignite a rapid and violent market correction, with devastating consequences for all caught in its fiery grip. The Shiller P/E ratio, a bellwether developed by economist Robert Shiller, adds another chilling layer to this impending crash narrative. This metric, which measures stock prices relative to their average earnings over a decade, reveals a stark reality. Stocks are more overvalued than during the Great Depression. According to the researchers at Guru Focus, the stock market is considered to be significantly overvalued based on the Buffett indicator. This indicator looks at the ratio of the total market capitalization over GDP. Currently, the ratio stands at 107.2%, suggesting that the market may only yield a 1% return per year from its current valuation, which considers dividends. This siren call of such overvaluation seduces investors into a false sense of security, casting dark shadows over the market's stability. You see, in time of crisis, governments and central banks have traditionally flexed their financial muscles by increasing money supply and lowering interest rates. However, Rickards sounds the alarm, suggesting that these tried-and-true interventions may not be as effective in the face of the current bubble. Instead, the contagious exuberance has fueled multiple market bubbles, rendering traditional interventions impotent when faced with such unprecedented challenges. Imagine a world where economic stability crumbles, leaving future generations to bear the brunt of its consequences. An economic crash has the potential to trigger a domino effect, reshaping policies, altering financial systems, and carving deep social and political rifts. A dreaded economic crash could usher in an era of sluggish growth, fewer job opportunities, and stagnant wages. Future generations might find themselves trapped in a never-ending cycle of debt, inhibiting education and infrastructure investments and hampering their chances of upward mobility.
There's a lot of debt. It has to be bought, has to have a high enough interest rate. So a crisis, that's, if we continue down this path in terms of what's likely over the next, 5 and 10 years, then you reach the point that balancing act becomes very difficult.
Access to health care, education, and social services might dwindle, jeopardizing the well-being of vulnerable populations. In the aftermath of an economic crash, anxiety will seep into financial institutions. Trust will plummet, credit will tighten, and loans will be harder to secure. The consequences? Future generations may struggle to start businesses or accumulate wealth shackled by the ghost of economic turmoil. Future generations might find themselves grappling with waning confidence, questioning long-standing systems. A good example is Japan, which experienced a lost decade. But did Japan come to experience a decade of stagnant economy? Well, it was the late 1980s, and the country was caught in an economic frenzy known as the Japan crash or the Japanese asset price bubble. During this euphoric period, investors and financial institutions rushed to pour their fortunes into real estate and stocks. Prices skyrocketed to dizzying levels, with Tokyo's land value surpassing the combined worth of all U.S. real estate. However, it all crashed in the early 1990s. The bubble burst, leaving behind a trail of economic devastation. Real estate prices tumbled, turning once coveted properties into financial nightmares. Stock prices nosedived, bringing losses and shattered dreams for many investors. But the impact didn't stop there. Japan's banking sector, heavily exposed to the bubble, faced a crisis of its own. The loans that had once seemed secure against inflated assets now became non-performing. The resulting banking crisis only deepened the economic spiral, leading Japan into a prolonged period of stagnation and deflation. This chapter in Japan's history became known as the Lost Decade. For nearly 10 years, the economy struggled to retain its footing. GDP growth stalled, and the ominous threat of deflation cast its shadow, making economic recovery seem like an unattainable dream. The Japan crash is a striking reminder of the perils of unchecked speculation and the fragility of bursting bubbles. Moreover, the crash highlights the crucial role of effective regulation and risk management. The lack of oversight and the unbridled pursuit of profit magnified the fallout, leaving Japan's financial system teetering on the edge.
So Japan's got a serious demographic problem, a serious debt problem, a serious deflation problem.
Additionally, the Japan crash underscores the necessity of nimble and decisive action during times of crisis. Delays in implementing effective policies prolong the suffering and delay recovery. Furthermore, the crash reveals the importance of building resilience through structural reforms and adaptability. Japan's inflexible corporate culture and labor market hindered its ability to bounce back quickly. Finally, another thing to learn from Japan's crash is the vital role of fiscal discipline. Japan's heavy reliance on stimulus measures added to its debt without producing meaningful results. Sound financial management with an eye toward the future is crucial for ensuring the well-being and prosperity of future generations. Nonetheless, the experts still maintain a belief with a 61% likelihood of a mild slide this year, as highlighted by the reputable Wolters Kluwer Blue Chip Economic Indicator Survey. It's a gripping tightrope walk as the economy keeps the world waiting, eager to see if these projections will eventually unfold. Well, it's time to take action. Safeguard your investments and brace yourself for the storm ahead. Jimmy Rickards' groundbreaking book, How to Grow Your Wealth During the Coming Collapse, provides invaluable strategies for individuals to protect themselves and thrive amidst uncertainty. Here are tips that will help you stay ahead of the game and protect what's yours. Firstly, education is your key. Fuel your financial journey with knowledge. Gain a deeper understanding of the economy, investment options, and market trends. Dive into financial news. Devour practical books like Rickards' masterpiece and seize opportunities to grow your financial literacy. Armed with knowledge, you'll confidently navigate the financial landscape and make informed decisions that unlock potential growth.
If I'm right about the fundamental economy, and obviously I think I am, and there's a lot to back that up, we're not going to get fabulous growth. And this, by the way, gets to the title of the book, The New Great Depression. Depressions are much more subjective. People say, well, if that's a recession, then a depression must be 20 quarters of declining GDP. And that's not the definition. You can have growth in a depression.
Secondly, diversify like a pro. Don't put all your financial eggs in one basket. Spread your investments across various asset classes, from stocks to bonds, real estate to commodities, and even venture into cutting-edge opportunities. Diversification is a robust financial defense, safeguarding your assets from market fluctuations while uncovering new and exciting opportunities. 3. Embrace non-traditional assets. Traditional investments are no longer the only game in town. Break free from the shackles of convention by exploring non-traditional assets such as cryptocurrencies, peer-to-peer lending, or venture capital. With careful research and guidance, these alternative options can unlock untapped potential and enhance financial resilience. 4. Forge your emergency shield. Take control of the unexpected by building a robust emergency fund. Aim to accumulate at least 3 to 6 months' living expenses in a readily accessible account. This financial lifeline will keep you afloat during unforeseen circumstances. The 5th tip: you need to conquer your debts. The power of financial freedom lies in eliminating debt. Liberating yourself from the burden of outstanding loans enhances your ability to weather economic downturns. Too much debt might make it harder to save money. Prioritize repaying high-interest debts, exploring refinancing opportunities, and seize every chance to minimize your financial liabilities. On to the 6th tip: to prepare for the storm, harness the magic of budgeting. Master the art of personal budgeting to unleash your financial potential. Take control of your income and expenses, set achievable financial goals, and constantly reassess your progress. Identify areas where you can tighten your belt, optimizing savings and investing opportunities. Through diligent budgeting, you'll become the architect of your financial destiny. Tip number 7, seek wisdom from financial gurus. While you embark on this inspiring journey toward financial preparedness, joining forces with a seasoned professional can amplify your success. Collaborate with financial advisors or wealth managers who can provide tailored guidance and expertise. When this financial maestro shares his insights, it's an unmistakable signal to perk up, listen intently, and take note of the invaluable wisdom that awaits. Now, more than ever, it's crucial to stay informed and prepared. Discover the power of conducting your research and analysis when it comes to making vital decisions on matters of economics. Are you yearning for a boundless future where you have the ability to shape your fate? Search no more. Click on the subscribe button, give this video a thumbs up, share it, and watch the next video, which will unfold a universe of infinite possibilities, offering a life-altering experience to revolutionize your existence.